Bitcoin, once again, is in freefall. Bitcoin has plummeted more than 20% after BTC China vows to close cryptocurrency exchanges.
Bitcoin will eventually blow up. It is a fraud. He would fire any trader trading Bitcoin for being stupid, and Bitcoin won't end well.
The firm has said that they will cease trading as soon as the end of September, after Chinese authorities said they would shut down the exchange on which the cryptocurrency is traded. What followed was a sharp Bitcoin sell-off that left Bitcoin trading down 30%, in contrast to the record highs that were achieved earlier this month. The blockchain currency has shed more than $27 billion in value. To explain a little bit more about the currency, I have Jonathan Davis, economist and wealth advisor, and the presenter of the Booms and Busts show. What is the potential of blockchain technology?
The ideal currency uses the blockchain technology. Blockchain is where in hundreds or thousands or maybe even millions of servers around the world, individual transactions are recorded, and therefore it's effectively impossible to alter that record. So, for example, a warlord in deepest, darkest Africa taking your land, you can now prove to the world that it's your land because it's recorded on the blockchain. So there's no question for me that the blockchain technology is going to be absolutely massive. It's going to develop hugely more quickly in emerging markets and repressed regimes than the developed world, but it will come to the developed world big time as well.
Does BTC China's rejection of cryptocurrency exchanges pose a permanent threat to the currency?
There are literally hundreds of cryptocurrencies, and although the technology of blockchain is very interesting indeed, and I would hazard to say actually that likely it will be more important than the internet. But the fact that there are hundreds of cryptocurrencies, it has told me for weeks, if not months, that there is pure fraud throughout the market. We saw Bitcoin get to just under $5,000 just a week or 10 days ago. It's now just over $3,000. Is this a direct result of China outlawing the private cryptocurrencies, or indeed Jamie Dimon, the chief executive of JP Morgan, saying that they are fraud at a major investment conference just this week? Well, it could be. Or indeed, it could be the fact that there was just an enormous bubble of psychology, of hubris in the crypto market. And I would say to you, it was probably the latter.
The fall in the Bitcoin, following China's vow to shut down the exchanges, shows that Bitcoin is purely market-driven. The more people want it, the more its prices rise. Can you explain this in comparison to regular government-controlled currency?
Well, the appeal of Bitcoin in theory is, of course, that the government and central banks are not involved. Of course, it seems to me very likely that as cryptocurrency becomes more generally accepted and used around the world, then governments are just going to take them over. Indeed, China has started that process. It has said no more private cryptos, but we'll have our own state-controlled one. Well, I can't see how that's going to be much different to fiat currencies. And for your listeners, to remind them, fiat means backed by nothing, just a promise, whereas, of course, up until 40, 50 years ago, the US dollar, for example, was backed by gold.
Bitcoin is not backed by any government, yet it more than quadrupled in value from December to September this year. It has a track record of recovery when faced with sticky situations. This was demonstrated with flying colours when the Bitcoin plummeted $500 million, then recovered entirely after Silk Road was taken down. The people cashing in from cryptocurrencies would argue that there's still a debate toward Bitcoin remaining a valid alternative to governmental currencies and a profitable business in itself. Maud Start, Radio Sputnik.